The game really changes once you have credibility. The whole financial landscape just shifts. Think about it. You spend the first 20 or 30 years of your career trying to build that reputation, proving yourself, delivering results, building trust one client, one deal, one decision at a time. That reputation, that fortress, is arguably the most valuable and yet the most underutilized asset on your entire balance sheet. And here's the thing, most professionals, most true experts, when they finally reach that pinnacle of trust, they continue to trade time for money. They get stuck in the old model, billable hours, project fees, they're just chasing the next transaction. And let me be honest, that is a fundamental, almost tragic mistake. That's why I want to talk to you today about monetizing that reputation. Not by scaling to the sky, not by launching some flash-in-the-pan online course, but by adopting a conservative, low-risk, high-margin, retainer-based consulting roadmap. It's a way to turn your accumulated trust into stable, predictable, and premium income. Look, this is about working smarter, not harder. It's about leveraging what you know, who you are. See, most people treat consulting like a commodity. They offer a service. They compete on price, hours, or scope. They're like the laborer who charges by the brick he lays. But you, with your decades of proven success, you are not laying bricks. You are the architect. You are the one who knows which walls to build, which ones to tear down, and which materials will last 100 years. Your value is not in the doing, it's in the knowing, in the judgment, the insight, the risk mitigation. And the market pays a massive premium for certainty and for avoiding disaster. That is the core difference. When you shift to reputation-based consulting, you change the entire conversation from "how much will this cost?" to "how much will your expertise save me?" That, right there, is a powerful and very profitable frame shift. I want to walk you through this, step by step, the actual principles for establishing this kind of practice. How you package your expertise, how you price it correctly, how you select clients that genuinely add to your reputation, and most critically, how you establish a durable, ongoing retainer relationship that protects your time. Now, the first step, and this is where most smart people stumble, is packaging your expertise. You can't just hang a sign that says "expert advice here." That's just too vague. Is built on specific measurable results. Is wise. You need to distill that history into a single, high-value point of view, that central thesis on how a certain class of complex problems should be solved. Think about it this way. I don't give advice on every stock. I give advice on value, on finding great businesses at fair prices. It's distill businesses. What is yours? Is it risk-adjusted capital allocation? Is it conservative growth in a high-interest environment? Is it generational transition planning for family businesses? It has to be specific. It has to solve a billion-dollar problem, and it must directly reference the outcomes for which you are already famous. Don't try to be all things to all people. That dilutes your reputation. Be the absolute unquestioned authority in one high-stakes, high-impact area. That narrow focus is precisely what allows you to charge the premium. Second, and this one is fundamental to the entire model, is client selection. You have to be more selective than the clients are of you. You are no longer trying to fill a pipeline. You are curating a portfolio of relationships that will enhance and protect your reputation. A poorly chosen client, one who is fundamentally dishonest, one who ignores your advice, or one who is already drowning in unfixable problems, can sink a decade of hard work faster than any market crash. Always remember, your reputation is non-refundable. What's the filter? I've always asked 3 simple questions about a potential investment, and I apply the same logic to a consulting relationship. First, do I understand the business and its problem? If I don't, I walk away. If the character is suspect, nothing else matters. And third, is the valuation, or in this case, the potential outcome, compelling? If you apply that conservative filter, you only take on clients who are primed for success and who will, by succeeding, make your reputation shine even brighter. Say no to 9 out of 10 opportunities. The third critical element is moving from project-based fees to the conservative retainer model. This is the absolute key to monetizing your availability and your judgment, not your labor. When you sell a project, you sell a finite outcome, a report, a plan, a transition. When you sell a retainer, you sell access to your mind for a defined period, a year, 3 years, 5 years. This shifts the client's perspective entirely. They are not buying a delivery. They are buying the option to avoid a catastrophic mistake. They are paying for the safety net, for the 5-minute phone call that saves them $50. The fee should be structured as an annual commitment, paid quarterly or semi-annually in advance, and trust me, it should be substantial. It's a fee for having your dry powder ready when their crisis hits. As the world's most trusted underwriter, the actual hours you work are almost irrelevant. What they are paying for is the guaranteed stability that comes from knowing you are in their corner. Most people price themselves based on their cost of living plus a margin or what a rival charges. That, again, is a terrible mistake. You must price based on the cost of the problem you solve, or more accurately, the cost of the disaster you prevent. If your expertise prevents a $100 million regulatory fine or saves a $500 million acquisition from collapsing, your annual retainer should be a tiny, almost negligible fraction of that value. A safe rule of thumb, especially when you are new to this model, is to charge a minimum of $25,000 per month, that's $300,000 per year, for a non-exclusive quarterly check-in retainer. If your advice is truly worth millions, this price point becomes a necessary filter. Clients who balk at this fee were never serious enough or large enough to benefit from your expertise in the first place. High price repels low-value clients and attracts high-value, high-trust opportunities. Fifth, you must establish an ironclad structure for maintaining your availability without sacrificing your time. The temptation with a retainer is for the client to try to consume all of your time, turning a premium advisory role back into an hourly service. Your retainer guarantees quarterly strategic sessions, 3 to 4 hours long and limited, high-urgency access for critical issues. Define what critical means. Is it a major personnel change? Is it an unbudgeted major investment? Is it a crisis communication issue? Crucially, you do not manage their day-to-day operations. Your role is that of a trusted, non-executive board member, the person who asks the 2 or 3 most uncomfortable, yet important, questions that everyone else is too afraid to raise. You are selling wisdom and perspective, which are slow-moving assets, not speed or volume, which are commodities. Sixth, and this is where the long-term compounding of your reputation begins to pay off, was the power of the referral lock-in. Your primary source of new retainer clients must be the existing retainer clients. Think about the network effect. If you select clients with the proper diligence, strong character, capable management, they run in circles with other high-quality, successful, and conservative people. When you solve a critical reputation-saving problem for a CO, they will tell their peers. And when they refer you, the trust factor is already at 90%. You skip the entire lengthy sales cycle. You become the solution to a problem before the problem is even fully articulated. This creates a self-sustaining ecosystem where the quality of your clients drives the quality of your pipeline. You are not cold calling, you are being introduced. And a warm introduction from one trusted executive is worth 10,000 cold emails. Let me tell you about a mistake I saw made constantly back in the 90s. Everyone was chasing the next big thing, the tech IPO, the aggressive expansion. I had a colleague, an excellent accountant, a brilliant mind for conservative corporate finance. He had built his reputation on decades of helping mid-sized manufacturers weather recessions and maintain liquidity. Solid, boring work. But when the boom hit, he felt he was missing out. He started taking on high growth, leveraged startups, charging project fees to help them structure their IPOs. He thought he was moving up. But these companies, operating on pure hope and debt, collapsed almost immediately when the cycle turned. And guess who got tied up in the messy, public failures? My colleague. The narrative shifted from conservative accounting genius to associated with that failed startup. He lost more reputation in 18 months than he'd built in 30 years. The mistake? He abandoned his point of view for short-term fees, and he took on clients who did not value his core expertise, risk mitigation, and stability. That's a lesson for all of us. Never sacrifice your expertise for a perceived opportunity. Botch expertise, risk mitigation, and stability. Seventh, you must implement a rigorous system for knowledge capture and intellectual property protection. Your advice is your product. When you solve a unique problem for a client, the process, the framework, and the 2 or 3 critical principles you used are your intellectual assets. You must capture them, refine them, and use them to build your next generation framework. You are not giving away the farm, you are leasing a tractor. You lease the use of the machine, but you retain the design and the ownership of the machinery itself. This allows you to apply the same core wisdom to different clients in different industries without repetition and without dilution. This is how a single great insight can be monetized hundreds of times. Eighth, and this is the philosophical part, you must cultivate the patience of a farmer. This consulting model is not a high-speed trading system. It is like planting an oak tree. You set the strategy, you establish the retainer, you provide the critical quarterly check-ins, and then you must wait for the advice to bear fruit. The client hires you because the problems they face are complex and require time to solve, often years. If you are constantly trying to sell them a new product or an add-on service, you look desperate. You undermine the very trust you are selling. Your value is in your stability and your long-term vision. The best advice is often the hardest to follow, and it always takes time to show a return. Establish the plan, collect the premium retainer, and let the compounding effect of sound, conservative judgment work its magic. Ninth, and this is a crucial step for the long-term integrity of the model, you need a mechanism for revalidating your value every renewal cycle. The client should never get comfortable. You don't want them to forget why they hired you. At the 1-year mark, you don't just send an invoice, you send a concise 2-page summary of the year, framed around the disasters they avoided. You quantify the risk mitigation. You reference the market downturn, the regulation, the competitor failure, and then you show how your quiet counsel kept them out of trouble. You remind them, without arrogance, that your fee is only a fraction of the cost of their mistake. This positions the renewal not as a decision to spend money, but as an essential high ROI choice for self-preservation. That's what locks in the next retainer. 10th and finally, never, ever, ever chase the spotlight. Your reputation is like fine gold. It must be kept safe, not flaunted. I have seen countless experts rise to prominence and then destroy their credibility by becoming media personalities, chasing TV appearances, or issuing impulsive commentary on every topic. That noise devalues your wisdom. Focus on your clients, focus on the quiet work, focus on the results that speak for themselves. The less you talk in public, the more people are willing to pay to hear your voice in private. Your goal is to be the expert that everyone wishes they had access to, not the one they can get for free on social media. Build your fortress of quiet competence. So let's bring this all together, and I want you to internalize these 6 fundamental pillars. Your reputation is not a trophy. It is a premium, high-yield asset. Reputation is a premium, high-yield asset that must be leveraged strategically. To monetize it conservatively and effectively, you must follow these principles. First, define your fortress of expertise. Package your entire history of success into a single, high-stakes point of view that narrow, critical insight only you can provide. Second, curate your portfolio. Ruthlessly select clients who are fundamentally honest, capable, and who will inevitably enhance your standing. Property of your clients is the quality of your reputation. Third, shift the value metric. Demand a conservative, high premium retainer for your availability, for your guaranteed judgment, not for your labor or your hours. Fourth, price the safety net. Price yourself not based on what you need to charge, but on the true cost of the catastrophic disaster you prevent. This validates your premium fee. Fifth, enforce sovereignty over time. Protect your time through ironclad boundaries, defining your role as a strategic counsel who asks the hard questions, not as a day-to-day manager. And sixth, let results whisper. Your sole focus must be on generating quiet, undeniable results that compound your client's success and your own credibility. Do these 6 things consistently, and you will fundamentally move from the anxious, low-margin cycle of transaction-based work to the profound, stable, and predictable wealth that only a leveraged reputation can provide. That is the roadmap. Now, you just have to execute. You have spent your entire career accumulating trust. Now is the time to leverage the trust to secure your financial future. This isn't about getting rich quickly. It's about getting rich reliably, conservatively, and in a manner that protects the one thing that truly matters, your name.